you get this 50-page document, and the guy wants to do, I don't know, he wants to build batteries in Soweto.
Okay.
Great idea. Great
Yes.
idea. 45 pages of that business plan is how the world needs to decarbonize, and batteries are the new thing, and we're all going to a low carbon market.
Got you.
In the next 5 pages of that 50-page business plan, he hardly says what's his background, who his target clients are, how he's going to market this, what his pricing is, where he's going to get the supplies from, who's he going to sell it to.
Yeah.
And I think for me, those are the important things.
Hello and a warm welcome to yet another fantastic episode of this JSE Investor Avenue series podcast. I'm Gugulethu Mfuphi and your host for the series of conversations where we've really been taking you on a journey to fully understand the world of capital markets and the various aspects that actually contribute to it. Now, today's episode is a masterclass. Very important because this is where we're going to learn a lot more about how capital markets like the JSE are really providing unique opportunities for businesses to grow. So think of it this way. When you think of capital markets, we're well aware that there's an opportunity to list your business, raise capital, and of course, as a result, grow your entity and return dividends to shareholders. But what happens when you happen to be building a business that might not be ready to list yet, but still needs some sense of financial support and capital investment? This is where the JSE Private Placements comes in. But I've got two phenomenal guests who are joining me in studio today who know all about this, will help us understand the technicalities, the intricacies, but most importantly, the opportunities that exist for entrepreneurs as well as investors. So I'm excited today to have two guests to join us for this masterclass, joined by Mokorosi, who is the head of Origination and Deals at the JSE. Always excited to speak to you, sir.
Thank you, Gugu. Really good to be here. Looking forward to the conversation.
Fantastic. Yeah. And we've got your fantastic colleague as well, Preshan Govinder, who joins us, leading sales at JPP, JSE Private Placements. Such a pleasure to have you, Preshan.
Thank you, Gugu.
Awesome. And I guess we obviously need to understand maybe the roles that you both play, right? Because it's very important that we understand how this ecosystem of JPP really does speak to the overall strategy at the JSE. So let's just start by understanding what is JSE Private Placements and what's its role within the overall group?
Sure. So very simply, JSE Private Placements is an online platform to help investors find opportunities to invest in the unlisted market. And it also helps unlisted companies or even infrastructure projects raise both debt and equity through the platform. So that in a nutshell is what JPP is.
100%. And I think this is important because it essentially does provide, as you say, an avenue to raise capital for these businesses with an understanding that, of course, it might not speak to a listing, but is an alternative. And this is also where you come into play here, Preshan. Add more context here.
Yeah, so as Sam mentioned, our mandate is to help these young businesses, but some of them are mature businesses, raise capital in the unlisted space. A lot of the investors actually that we speak to within our listed market have a mandate to invest in unlisted as well. So yeah.
Exactly. I'm glad that you mentioned that because there's a mandate to follow. We're speaking to investors, but also business owners. And maybe let's just start with investors in terms of understanding the key differences that come into play when it comes to investing in a listed entity versus private placements. Because if one does visit your website, there's clear details that are listed, whether you're looking at debt, equity, combination of both, or others. Without getting too technical, maybe talk us through the differences that investors need to be aware of.
Sure. Yeah, so I think the great thing about a listing is that you can buy pick and pay this morning and then suddenly decide you want to go to the Maldives for the holiday and sell your shares this afternoon.
Yes.
And get your money in and out quickly. I think the main difference behind unlisted investing is that it does take longer. So your investment horizon has to be months, years, in some instances. So you don't have that constant liquidity that makes the listed market so free flowing. You can get in and get out in the morning and in the afternoon in the listed market.
With that lack of liquidity also comes with the potential of a higher return.
Yes.
So that's obviously a great attraction for these investors to get into the unlisted as well.
100%. And I also assume in different sectors, right, Preshan? Because this is also an opportunity where it's not just retailers, metals and mining and resource stocks, or even those in banks and financial services. You often take a look at, I guess, the applications that come through, and this offers you an opportunity as an investor to say, okay, well, here's an interesting sector that I might not have considered before.
Yeah, no, exactly. It's a good, just in general, it's a good diversification of your model portfolio as an investor to have some allocation towards an unlisted asset or environment. And you'll see that in the unlisted space, it follows the same sector construct as the listed environment, obviously with a much smaller market cap.
Got you. That also comes with, I guess, lots of questions around governance, right, and controls. There are many South African entrepreneurs, I can imagine, who think, I can't wait to list my company on the JSE, but it must come with a lot of controls, effort, and support, and of course, as you mentioned, a sizable market cap.
No, for sure.
Speaking now to entrepreneurs and business owners regarding private placements, when should they start considering if JPP might be an option for them? Preshan?
I think at any point in your journey, right, come to us as early as possible and sort of partner with us along this journey. We may not be able to find a suitable investor immediately, but we'll be with you throughout that journey until we can. So we don't have a mandate that says you have to be a certain revenue size. I mean, we do state that we would like you to raise over R1 million for us to make it sort of feasible for us to be involved. But we'll take on early stage businesses to startups even. Yeah.
Really?
Yeah.
Looking for the unicorns on the continent and the country.
For sure. I mean, we want to be there to help these businesses, and I think of it as a roadmap to listing, right?
Yes.
So we want to be there early, help these businesses get to a point where they're able and willing to list on the main board.
100%. So I think it's quite clear this is an opportunity for both businesses as well as investors to find a unique opportunity to invest in businesses and spaces that perhaps they might not have access to ordinarily, or would come with a lot more due diligence, paperwork, and frustration. But the JSE in itself has actually provided so much more efficiency
100%.
to assist entrepreneurs and also offer investors a new avenue to allocate their capital. I'm keen to understand the growth. Before we get into the technicalities about how it works and how we get there, maybe it's also important for us just to reflect on the growth. If I'm not mistaken, JPP launched in 2021. It's 2025 now. What's the growth been like?
Yeah, it's been a fantastic journey for us. We launched in 2021 with investors coming on board. In terms of us asking the investors, every time they register, we say, well, how much money is in your pocket? So we also want to know that there's actually money behind these names. And so I think in 2021, we had about 5 billion rands sitting in the investors' pockets. That's grown nicely over the last few years. We're sitting at about 20 billion rand in the investors' pockets at the moment. So the money is there, looking for high quality investment opportunities. And that kind of growth really just excites us in terms of seeing that there's appetite for high quality opportunities, debt and equity as well.
100%. This gets me excited because, as you say, the money is there, so the support is there. I can imagine there must be entrepreneurs who are sitting thinking, okay, should I consider this process and what does it entail? High opportunity growth companies is what Sam mentioned. What do you look for, Preshan? And maybe give us an overview of the process in terms of applications.
Yeah, so I'll touch on the process first. I think the process is straightforward, right? Send us a business plan or send us just a straight up business plan of who you are and why you need funding. And we'll use that as the basis of how we engage further or whether or not we engage further. Thereafter, if
maybe on that one, what needs to be included there? Because sometimes a business plan, depending on who you are, your background of understanding, we might get confused around the content.
Maybe I can come in here with a little a pet peeve of mine, if I can call it that. I've seen so many business plans in my life, and you get this 50-page document, and the guy wants to do, I don't know, he wants to build batteries in Soweto.
Okay.
Great idea. 45 pages of that business plan is how the world needs to decarbonize and batteries are the new thing and we're all going to a low carbon market.
Got you.
In the next 5 pages of that 50-page business plan, he hardly says what's his background, who his target clients are, how he's going to market this, what his pricing is, where he's going to get the supplies from, who's he going to sell it to.
Yeah.
And I think for me, those are the important things. Yes, we can understand your whole vision about how Soweto needs investment and we come from a history, but yeah, tell me who you are. Tell me how you're going to make this business a success. Who are your clients? Who's on your team? Do your numbers make sense? You know, you're building a battery for X, but you're selling it for X plus. So what's your margin like? You know, what's your fixed costs? So I find that's where a lot of the business plans, as Preshan talks about, are low on those information. And for me, on your front page, I want to know how much you're looking for. And what does the investor get in return? Is the investor getting dividends? So are you looking for equity? Is the investor getting interest? So is it a loan? How long is the loan? And it's so hard to find like answers to these questions in the business plan. In many business plans. I
find that so refreshing because, as you say, it's important and it's really knowing more about your business and what you need the funding for and articulating that as succinctly as possible. 100%. And I can imagine that through this journey of actually receiving vast applications where some information might be met or not met, this is also where you step in, right, as the JSE to say, okay, let's hold your hand and guide you, because there might be a gem you're working with here, but Preshan, you come together with your team and say, this is what we need, let's interact and engage. Talk us through that further.
So I think, just for anyone looking to raise money, you need to make the message as clear as possible, as Sam mentioned, to the investor around what the investment opportunity is, right? So I'm looking for 10 million rand in order to manufacture batteries that will translate into 30 million rand in 3 years' time. In simple terms, and then detail how you're going to get there, right? Also, like, I want to be able to see that, okay, you as the team have made batteries before. So you've got the technical expertise to do it, and you're currently selling them. You know, so you've identified the market, we can see there's a proof of concept, and then you know exactly now when you get that 10 million rand injection, where you're going to use that money. Are you going to use 5 million rand in marketing? In marketing, exactly what activities are you going to do? You know, so on a granular level, that just builds my confidence in actually understanding and knowing that you know how to execute on this.
Got you.
Right. And then, we use that as a basic. We're confident with it. Our confidence comes through in how we communicate with investors.
And I think Preshan touches on an important point, which is track record, right? And we said we're very happy to look at startups and new ideas, but it makes sense if the startup says, you know, when I was at this big multinational, I ran a battery factory.
Got you.
And so using that experience, I'm now starting a battery factory in Soweto.
Got you.
That speaks miles more volumes than, hey, I woke up the other day and, you know, I've been, inspired to build a battery factory. But to date, the only thing I've done is, manufacturing shoes.
Or done a market study.
Or I've done a market study using ChatGPT.
Got you.
You know what I'm saying?
So proof of concept is important as well for startups. Got you. I think this is so refreshing because it really does leave entrepreneurs, again, empowered, right, to make sure that they've applied their minds instead of just saying, oh, I need money, but you're not even sure where this money is going to be allocated to. Other than funding, are there other aspects of their business that they need to ensure that they've got in place? So you mentioned battery manufacturing. There's obviously legal compliance and other technical requirements that might be needed there versus someone who might be in the services space with different requirements there. So in other words, that big word around bureaucracy and compliance that entrepreneurs are concerned about, how do they need to ensure that they top of mind, prioritize that in the application?
So I guess, the bigger you are, the more the compliance burden is in general, right? But on a minimum, at a minimum level, your business has to be registered. So you have to have a SIPC registration.
Even as a startup?
Even as a startup.
Got you.
Have that formalized. And then, obviously, if you're a startup and you don't have financials, we can exclude that. But if you are a going concern, have some sort of financials as a baseline. Preferably have it independently compiled or independently reviewed, just so the investor has some comfort in that. And on a basic level, that's it. have your financials in place, be a registered business,
Yeah.
have a tax certificate,
Yes.
or a SARS tax compliance certificate.
Yeah.
Got you.
Yeah, and anything else?
Yeah, and then there'll be industry specific issues, right?
Oh, yeah.
So
Yeah.
if you are, trying to mine Chrome, for example, we're going to ask you all the mining related questions. Do you have a prospecting right? Do you have a mining right? Etc. If you are wanting to build a wind farm, right?
Yes.
Have you got ESCOM connectivity? Have you got your NERSA licenses? Those kind of things then become, more important. But yeah, so there's the basics that apply to everyone, and then each industry, each
Has its nuances,
place will have different requirements, and licensing requirements,
100%. What's refreshing is also seeing how simple the process is online and that there are guidelines. So I'm assuming that there's ongoing communication even post the application is submitted as well?
Yeah. So post the application, you'll hear from me.
Yeah.
Saying that, listen, we like your business plan or we don't like it. We will state why, right? Either we don't have the investment universe for it, or we think that maybe you need to grow in these areas first before you approach for funding. Or if we like it, we'll be in touch and say, listen, we like this business. Can we take the next step forward? Can we have a meeting?
Got you.
Let's have a meeting to discuss how we can take this forward.
You're the man we're going to look for now, Preshan, when it comes to feedback.
Yeah.
But I think that helps us understand the positioning of entrepreneurs. As you've mentioned, no strict levels of requirements, but essentially have a business, make sure it's registered and compliant, come with your numbers intact.
And know your numbers well.
Know your numbers well. Great that you have the vision, but of course, even the plans that you have for the next 5 years. So entrepreneurs, I'm hoping that they're taking note in order to come fully prepared, right? Let's talk about the investors. Because I might be sitting, and maybe it's important that we clarify, which kind of investors we're speaking to. In the ecosystem, we know that there are institutional investors, where we put our pension funds and allocate our money into the investment universe. But there's also Gugu who sits at home, perhaps, using an exchange traded platform or an account that you might have with a broker or a bank and decides, okay, well, in as much as I like Pick and Pay, I think I'm also interested in investing in another business, in a smaller ecosystem. Retail versus institutional investors. Are we both able to invest within JPP?
100%. I'll touch on retail. Yes. Because I'm very excited about actually one of our clients that has already raised some money from retail. This is a movie fund, believe it or not, that sits on the platform, and essentially they invest in some of the production costs around some of these Netflix shows, etc. And so that's been really fun. But what we enjoyed about the innovation there is that your minimum subscription is 5,000 Rand.
Okay.
So that's really targeting that retail investor.
So if I can afford a flight to Cape Town, return flight to Cape Town, I can afford to fund a movie, right?
100%.
Okay.
So I mean, I think that's something that we're really looking forward to, and that specific client is coming back to us with another retail opportunity to build a South African social media platform. So that's really exciting.
Wow.
So there's definitely space for retail. A lot of the other clients though are looking for much more money, and so minimum subscription sizes there are much higher than call it 5,000 Rand. So maybe Presh can talk about the kind of retail investor, institutional investors that we've got and what they're looking for.
Yeah, I mean, there's varying degrees of, I would call it professional investors. So all the way from venture capital up to what we know as our pension fund that's managing billions and billions of rands. I mean, each of these investors have a different criteria of what they're looking for. So if we start at a venture level, they're obviously looking for a massive return in their investment horizon. They're looking for a business that they can get in early, but has the potential to grow 10, 20 times over the next 7 years. They're willing to take on more risk, but also they have nuances in that they want to see that you've got a proof of concept in place.
Got you.
And that you really understand your market and how you're going to tackle this market.
The due diligence, right? Because they need to make sure if they're taking on other people's money to put into your particular business, that you've got your ducks in a row.
Exactly. And that's when the credibility of the founders come into play.
Yeah.
Generally, that's one of the most important things they look at. Has this founder either done this previously? Has he run a successful business before? Or has he been in this value chain long enough for him to be an uber expert in it?
Got you.
Right, and then as we go up the curve towards more mature, more risk adverse investors. So your pension funds also have a mandate to invest in unlisted assets, but they're looking for more matured assets. So these assets have been running for 10 years, have an EBITDA of 20 million and above, have a proven track record, but they're still unlisted and they still have a potential to grow if pushed in the right direction.
100%.
So I mean, we cater for all of those types of businesses. We have networks amongst all of these types of investors as well. But yeah, it depends on what that specific investor is looking for. And then we have the likes of family offices who are even more, they have more risk appetite. And they could potentially take on a business that's a bit more early stage, and when a venture capital firm could step in.
Got you.
Yeah.
I'm so keen to understand what the timeline and processes are like here, because that also matters, right? In terms of the urgency for the entrepreneur to get the funding and grow their business, and the urgency for the investor as well to allocate capital and, most importantly, see the growth and the gains over the long term. On average?
So maybe it does depend on the type of deal. So some of our smaller deals have been around procurement-based financing. So maybe you've got a purchase order from a Clicks or an Eskom or Transnet, etc., and you need to kind of deliver on that purchase order. So you're not willing to wait for months. In fact, your timeline is days. And so we do have some funders that can turn around your application in days.
Okay.
But then sometimes maybe you are building a hospital in Limpopo, and you know, you need licenses from the health department, and you need to put your civils in, and all of these long-term things. And so that can sometimes literally take years. So we've seen some difference, but generally, you know, a vanilla deal shouldn't take more than 3 months.
And by vanilla, we're not talking about flavor. We're talking about the structure of the deal, right? It's simple,
also,
I guess. Yes.
Considering the fact that the entrepreneur or the business owner needs to have all of the documentation in place.
Yes.
Yeah, because there's lots of back and forth. Once we submit an application, there's back and forth questions that come from the investor. And the responsiveness as well is also quite important.
Yeah.
Tell us more about that. The urgency to, you know, follow through, share the responses.
I mean, that's critical, I think. So once we have an investor that's interested in looking at a deal, your responsiveness as an entrepreneur is critical. So if you take 2 weeks to respond to a question that an investor has, they'll have another 10 applications on their desk. They've lost interest already.
Okay.
So you need to be on the ball. You need to have your ducks in a row. You need to respond to emails, answer calls. Just be as responsive as you can.
Yeah, in the industry, we've got a term, deal fatigue. Deal fatigue really kills deals, and a lot of the fatigue comes from just basic questions going unanswered.
Yes.
And the investor kind of just, forgets about your deal and moves on to the next one. And then when you're finally ready 3 months later, it's like, who are you again?
You got to go back to the drawing board. Tell them exactly what you do.
Okay, that's what we definitely want to avoid. Okay, we're prioritizing deal flow, not deal fatigue, responsiveness from entrepreneurs.
100%.
We as retail investors have the opportunity also to invest in amazing sectors, and great to hear the exciting opportunities that are coming on board, and also knowing that we're contributing through other avenues with large institutional investors who fundamentally take care of our money as nations and businesses and organizations through that level. I want us to talk about a contentious issue when it comes to investing. The elephant in the room, fees and costs. Preshan, what are we looking at here?
Yeah, I mean, things are only expensive if you're not getting value out of it, right? So I don't think our fees are a contentious issue. But we essentially have two sets of fees. One is it's called a setup fee. So this is to be part of the JSE Private Placements program. And it depends on how much capital you want to raise through us. So our minimum fee starts at 20,000 Rand, and the maximum goes up to 150,000 Rand upfront if you're looking to raise over R1 billion through the platform. And we also kind of use this as a filtering mechanism to see, I mean, are you serious about raising capital?
Yes.
Do you have liquid funds available in your business for you to sort of go through the process of raising capital? But the majority of our fee comes from us actually securing funding for you. And that's paid at the end. So once the investor pays you, you pay us.
Gotcha.
So the highest we charge is 1.8% of the money that we raise, and that goes down to 1.2%.
Oh, wow, very competitive.
I think it's 0.8%. Sorry.
Yeah.
If you raised over $1 billion with us.
Yeah.
Got you.
Yeah.
That's very competitive, and I guess again going back to an entrepreneur knowing their numbers and how much they need, where they'll allocate it to, what the growth prospects look like. Then that's obviously where you do a comparative analysis. And maybe many might ask, but hold on, doesn't this sound like corporate finance? Are there differences here, Sam?
Yeah. Look, I mean, the reason that also our fee is competitive is that your corporate finance advisor is going to do a lot more than we do, right? So they are going to do the financial modeling, the valuation. They are going to structure the deal, hold your hand in negotiating the legals right at the end. And so they may charge, 3. Sometimes we met with an advisor yesterday that charges up to 5%. And their service suite is a lot bigger than ours. Ours is an efficient and very focused deal distribution functionality.
Yeah.
And so we've done lots of deals where there's an advisor and there's JPP. And so between us, the advisor really cooks the cake, bakes it,
I see.
and then we kind of pass it on to the investors.
Gotcha. The right investors.
Yes, 100%. So our strength is really that finding the right funder for your opportunity, finding the right investor. Some of our clients don't come with advisors. They come on their own. But usually in that case, there's a really strong financial director or financial manager that's on top of the numbers, can do a financial forecast, can do a historical analysis as well. So it does arrange a little bit. And so sometimes a client will come to us and will say, this is a fantastic opportunity, but your paperwork probably needs some upgrading.
Yeah.
And so we can then refer them to an advisor. The advisor helps you the corporate finance advisor helps you package the deal and then bring it back to us, and then we kind of distribute it to investors.
Yeah.
So that's really the difference between JPP and a corporate finance team.
Gotcha.
I mean, we work with corporate finance advisors all the time. I think my preference is actually to work more with them because they bring us well packaged deals. And obviously they're coming to us as a JSE to distribute the deal.
I like the analogy as you made of baking, right? Because it's like, okay, well, we want to present this cake and this is what the end goal is. With icing, without icing. Oh, actually, we like fruits and other decorative items on top. Or maybe we just want a simple sponge cake. But to know how to get to that end result, that journey is participated in with the JPP. And of course, understanding that there's an advisor involved in you as an entrepreneur, having your numbers in order and your documents in order, and then walking through that journey of providing the end goal. This, for anyone who's listening, certainly should be exciting because it's not about listing or not listing or listing versus JPP. It's actually saying here's an alternative depending on the size, scale, and requirements of your business and the growth that you'd like to find. I'm keen to hear about some of the amazing examples that you have because given that the fund has grown, that the process has become easier and more seamless, your team is also on board to help many entrepreneurs. Share a few examples with us of companies that you've worked with and helped essentially.
Yeah, so we've got a car leasing company that did a really fantastic fundraise through us. What was really touching for me was when the CEO said, with this new facility that we raised from one of the banks, we were then able to grow our business and hire more people.
Yes.
And so for us, that's a really important thing that we're not just about growing businesses, but we're about changing people's lives, dealing with the unemployment issues that we face in South Africa. Maybe Preshan can talk about some of our clients that are still raising money with us, but another client that raised money through us is a construction equipment manufacturer. So they manufacture these rollers that you see on the roads when they're filling our potholes. So they were able to raise some capital through us, and again, it's about it's not that kind of Santon business, of spreadsheets and PowerPoints. It's real hardcore infrastructure that we're supporting and facilitating. So those are the real kind of reasons that I get excited about waking up and helping clients like these raise capital.
I mean, and the clients that we help are so diverse, and I apologize if I've missed any of the clients, but I'm going to mention a few now.
Yeah.
That's top of mind. So we have like a mining services business. The entrepreneurs are all seasoned miners from some of the majors. They have a vision of being the next Anglo-American, Black Anglo-American.
Sure.
And they're well on their way. They have a very established business. They're looking to acquire mines, and we've been helping them along their journey. And then on the other end of it, we have there's actually two of them, fully black-owned insurance businesses. They've got their own underwriting license. Now they're looking to grow their book, and they're looking to grow their market share, which is also very exciting. And then we have property developers that are doing retirement estates in the Western Cape and in Gauteng as well.
Oh, wow.
So it's so diverse. So many wonderful entrepreneurs with exciting projects. It's fantastic.
So this is where I get excited, right? It is like tickling my brain cells because it's, as you say, diverse businesses, diverse roles and functions that they have. And ultimately, it's literally saying that the JSE through JPP has offered an opportunity to grow and support these institutions
100%.
that at the end of the day do make a difference in our lives and livelihood in the country. And I can imagine even beyond and further. And maybe that's also an important question to ask for businesses who might be on the continent or those external looking to grow and develop in South Africa. Can they use JPP as an option to partner with?
Well, we do need a South African registered entity to be our client. So what we've seen from time to time is that an entity may be doing business in Botswana or Lesotho, etc., or Namibia, but they do have a registered entity locally. And so sometimes the transaction is that the local entity raises the capital and then does an intergroup loan to the entity in Botswana or Namibia, etc. So that's worked before. So that's something that we can certainly look at.
But also open to the conversation where a business wants to do a business in South Africa, and they could partner with one of our existing clients.
Yes.
So, for example, an insurance business in Nigeria would want to open up a branch in South Africa and needs a license. You could talk to one of our businesses. You know.
Exactly. Driving efficiencies, forging partnerships, and finding those opportunities.
Exactly.
This has really been a phenomenal masterclass, and I'm hoping that many people will get in touch and, of course, visit your website. A link which we will share with you below here on the screen to make sure that whether you're an entrepreneur looking for capital or an investor looking to allocate your capital to a business, you will be able to find your way through the platform and seamlessly integrate with the team and partner with them. But as we usually do when we wrap up our conversations, we always want to make sure that we have 3 key takeaways for investors, for entrepreneurs, but for anyone who leaves this conversation today. JPP, we know what it's about, but now we want to partner. We have an idea of what the systems entail. What do we need to bear in mind in order to prepare ourselves for interaction?
So maybe I can do something for companies raising capital, and Preshan can do for investors. But
Sure.
I think if you're raising capital, I think it is an intense, focused activity. So I think point number 1, make sure that you're taking the time to focus on your fundraise, to get your paperwork in order, to understand exactly how much you need, for what, and what type of investor. So I think that's probably my first
Know
take.
your numbers.
You know your numbers and have your paperwork in order. I think the second thing is you do need the patience. We have seen clients get frustrated because we all want it to be easy, quick, and but the investors themselves have their own fiduciary duties to make sure that they're funding something that's worthwhile and that they will get their return. And then I think the third thing is to remember that the JSE network is broad and diverse, and so if a deal is fundable, we will be able to find that investor within that broader network. So we're looking forward to engaging with people's deals and opportunities.
Fantastic. Preshan?
And then for the investor, I encourage us to just have a discussion. Approach us, let us have a discussion about what sort of assets you're looking for, what does your mandate look like, and perhaps we may not have a business that you could buy into now or willing to buy into now, but we can definitely originate that for you. We see so much deal flow through our platform the likelihood of us finding an asset that matches what you want is very likely.
100%. From movies to mining, maybe construction to confectionaries. The truth is that, there's a wide ambit of opportunities available. Gentlemen, this has been so refreshing. Thank you so much for your time.
Thank you.
Get ready for your phones to be busy after this conversation.
Are you distributing our phone number?
Not yet.
Thank you.
But that was our conversation, of course, discussing all things regarding the JSE Private Placements platform, how it works, why it matters, the difference and impact it can make, and most importantly, the opportunities that are present for both the universe of entrepreneurs and, of course, those within the investment realm. Do make sure that you log onto the website, JSE Private Placements, for you to get a full understanding of the application process, which is seamless. And most importantly, as has been mentioned by my guests today, Preshan and Sam, that you need to ensure that you've got your paperwork in order. And from there, the partnership will certainly begin. Well, as always, this has been a fantastic conversation that we've had with you here today. We look forward to your questions, your feedback and commentary. So do interact with the social media pages of the JSE and leave your comments at the bottom of this video. Until next time, have a good one further.